The process for a hard money loan. Okay, this is what you guys are going to be walking through with your clients when you're talking to them one-on-one. It's going to be pre-approval. That's where you're going to be talking about their deal, making sure that they meet the requirements for the lenders that you're working with. You want to make sure that they're going to make money and understand any other pieces of the deal, any wrinkles, if there's a wholesaler involved, or if there needs to be, if there's an estate where they're inheriting a property, that would be through probate. That's the death distressor. You want to understand that and uncover that. And then you want to talk about what the pricing of the funds would be, but the priority being that you close fast and it's available for them to be able to use instead of their own cash. Once you know more about the deal, you're going to issue them a preliminary term sheet through the lender's calculator. I'll show you how to do that through in the boot camp if you guys want to take the next step. Once they get their contract accepted, that's when you're going to collect the rest of their paperwork, their LLC documents, their driver's license, avoided check, scope of work of what they plan to do to the property, the purchase and sale agreement. Simple stuff. It's not a whole lot of paperwork. It's not complicated. And most of the time, they have that all electronic. And if they're working with a real estate agent, you can get half of that stuff, from them as well. And they're here to get paid. So understanding that we are working as team members with people that are getting to the finish line. Those are real estate agents, insurance brokers, title companies. We're all working, wholesalers, we're all working together to get to the finish line. And if you can be the quarterback of the transaction, which I believe that we are, we're the most important person in the transaction because we're the ones responsible for everyone getting paid. We are in control of the money. If you ingrain that identity into you, then you can control the conversation, you can control the transaction as best as possible. Once the contract is accepted, you collect the paperwork, then you need to get some sort of valuation. It's going to be an appraisal or a desktop BPO. That means that we need to determine what the value of the property is worth today, and based off of the scope of work, what they plan to do to the property, what it will be worth once it's all fixed up. All right, let's see if we're paying attention here and see if there's any experts in the room. There's a three-letter acronym that stands for what a property will be worth once it's all fixed up. Go ahead and put that in the chat. There's a three-letter acronym that stands for what a property will be worth once it's all fixed up. Go ahead and put that in the chat. Oh, were you guys not even seeing this? No, you were. Perfect. Perfect. Okay, guys. It's ARV. It's after repair value. And more so, I would say 1 and 1A. One is the purchase price, 1A is the after repair value. This is where, what a property will be worth once it's all fixed up, what the after repair value is going to determine whether or not there's a likelihood of them pulling out cash, allowing them to repeat this process over and over again when they go to refinance. Okay. So if there's any holdup or if there's any stick in the transaction, it's going to happen here at the valuation. Most of the time, we're going to get a confirmation of the purchase price. And if they've bought a good deal and they have their scope of work outlined correctly, they're going to get the after repair value that they're seeking. I'm going to stop the share for a second, just make sure that everybody has what they need so far. Are there any questions before we get into the back end of the hard money loan process? I know I just ran through a lot between the pre-approval, issuing the preliminary term sheet, getting the contract accepted, and then the valuation. If you guys have any questions, go ahead and put them in the chat. All right, we got all experts in here. I'm doing a great job. So after the valuation is complete, that's where we're going to confirm the terms. So we went from the preliminary term sheet. This is what the loan will look like if all of the numbers are confirmed by the valuation. Now we understand the valuation. Now we can confirm the terms. This is where we're going to go and incorporate our third-party partners. We're going to grab insurance. We're going to grab the title conditions, make sure that everything is kosher and on our way to closing. We'll turn those documents back into the lender where underwriting will do their final review, and then they will issue us the clear to close. Should take about 2 to 3 weeks and as fast as 7 days. And then, woo, That's where we get paid, and we're charging points. So for every $100,000 that there is on the loan, and guys, I don't know what all markets are you in. Maybe in Louisiana it might be a little bit light, but if you're out in the Philly area, or especially if you're in California, where people are buying flips for 400, $500,000, putting $200,000 into them and looking to sell them for eight or nine, maybe even a million. If you charge 1 point on 600,000, that's 6 grand. How many of those would you need to do in a year to pay for a vacation, put money back into ad spend for your wholesaling business so you can go grab more deals? Go ahead. For right now, if you were to close a 1 point deal on a 300,000, 400,000, $500,000 loan, that means that you would be taking home three, four, $5,000. What would you put that money to work doing right now inside your business? And if you're brand new to business in general, if you were able to make that commission, what would you do as the first thing? Would you put it back into developing more of a business for yourself, or would you go on vacation? Go get a nice Louis bag. CM Mitch, I like it. Reinvest into ad spend. What's the commission? You're determining your own commission, my friend, Joe. So if you have a $200,000 loan and you want to charge 1 point, you're going to make 2 grand. I don't like to make less than $3,000 on a deal. So if we have a $150,000 loan amount, I'm charging 2 points. Salter Pineda. Okay. Jerry would get right into real estate investing as soon as he made his first check. Is it a split with someone else? Joe, I'm telling you, I am coaching you right now on the overview of this business. The lenders are going to charge their own points, but when you work with the right lenders, and I'd hope that you'd want to take the next step and get into the boot camp where I'm going to hook you up with all of the lenders that I work with. Um, most of my clients are seeing a total of 2 to 3 points. The nationwide average for hard money loans is put on the previous slide. You're looking at anywhere between 9 to 13% interest and 2 to 4 points. That means that if you have a $150,000 loan and the lenders that I work with are at a base of 1 point plus their processing and underwriting fee, then we can charge 2 points on that loan and still be competitive with the nationwide average. That's why I love this business, is because the lenders view us as a part of their sales force. So we are able to get that discounted pricing to offer, because the lenders look at us and are like, okay, well, you're telling me that I didn't have to market for the deal. I didn't have to collect all the paperwork, my processes. I just had to underwrite it, review it, and fund it, which is what I was looking to do anyway. Okay, that's a great relationship. So commission comes from the lender's loan. Um, Joe, I think you're trying to poke holes in something that doesn't need to be poked holes in. Uh, the lenders were going to fund the deal. We're connecting the two parties, and because we're doing a little bit more work by collecting the paperwork and coordinating the deal to close, then we earn our commission that way, and the lender doesn't have to do that. Awesome.